19, 2020, and it's 9:50 a.m. in London when we're doing this market update. We're gonna take a look at the markets. We had some really nice push higher in stock markets yesterday, as it looks like we are on the verge of getting a vaccine against the coronavirus. And that's pretty much the headline of yesterday, but it's also what people are talking about today. And more importantly, I think that's going to be behind, it's going to be something that drives people's trading decisions. That's why I have it there in the very top. So you've got the company called Moderna, based in Boston, that have finished the first step of their COVID-19 vaccine. And I'm not an expert on vaccines and things like that, but long story short, people that they were giving this vaccine, they developed the same amount of antibodies against the virus as people that had recovered from the virus. And that's important, right? Because usually what happens, you get sick, your body creates antibodies, these antibodies fend off and fight off the virus, and then you're well. So they created something that can give you the same if not higher amounts of antibodies as people that have recovered, and that is really encouraging. It's not, though, I think I saw some comments out there somewhere that even if it wouldn't be like 100% effective, even if it would just repel 60 to 70% of all potential infections, that would still be sufficient to effectively kill off the spread of the virus. So this is really, really encouraging. And this is just one out of about 100 and so different trials out there, not trials, but companies out there trying to develop a virus against this. We already know from the past that we have remdesivir, which is the Gilead product that is supposed to shorten the time of sickness from 15 days to about 11 days. That's also another piece of news that we have here. So we have what could be the beginning of a vaccine, so people don't even get the disease, and then we already have something that can help you when you are in trouble. And that is obviously really encouraging, because imagine we have a vaccine from day to tomorrow. Well, we all go back to the office, right? We all go back and work, and this will be over. And what would be still in the market, though? All this money that governments and central bank push to the markets, because they're not going to say, oh yeah, so now we have the virus or the vaccine, we're going to scale everything back. It's election year in the US in November 2020. And I think, if anything, they're going to keep all this liquidity in the system and all the fiscal support in the system. And it makes sense as well to keep this support to be able to get the economy going. What tends to happen at that point? The economy overheats, you have high inflation, but in the process, stock markets can add another, I don't know, above the prior high, maybe 20% or so. So it's looking really encouraging, and it was always gonna be like this anyway. You can't fight against humans. I think in general it's very difficult to fight against humans and our desire to live. So we've seen some very nice moves, and we're gonna look at the German DAX in a few minutes, talk a bit about that, because it's not all plain sailing and safe sailing. So we're going to talk a bit about that. What else? World Health Organization investigation against China, and not against, but what I see what happened in China. That seems to have worked out now. More than just the U.S. put pressure on China, and they have agreed to go ahead with that. And now the headline as well: Bank of England, Silvano Trenio talked about negative rates and how that actually helped the euro area. So people saying that maybe opens up for negative interest rates in the UK as well. So these are a bit of the headlines, and let's take a look at the charts then. So let's just begin with the German DAX, because that's where the action is. And you have the the German DAX. It went all the way up, took out the high. As you remember, I was bullish. I was looking for that pullback, but then we got this piece of news and the market just rallied. I think because we have the news, and that news is positive, I think we can continue to probably see higher and higher prices here as well. The question is from which levels, and I think maybe from 50% correction, something like that. There's obviously a bit of a challenge, and the challenge is that we're still within this bit of a range. So in worst case, we could potentially go all the way down, and that could happen if more news will be revealed about the study that that means that they made a mistake or didn't make sense, and that could be an issue. And as well, it's not again plain sailing even that. The next step is to do another phase where they're going to have much more people. Now they know that the drug is safe. Now they're going to do a bigger test with where they try to determine what's a good amount of dosage, and as well they're going to give people placebo, where you give them something and they think they're getting something, but in fact it's nothing. And that's when we're going to see the real even more better results if this is sustainable. And then even the production of this will be probably not until summer next year, so still gonna take some time. Anyway, 50% correction, I think that could make sense. Keep an eye on this one. Keep an eye on what's happening in the S&P. In the S&P, we're dealing far more with range bound market than in the other market. We have resistance here, and I think we can go down a bit. And if we go down to something like 28.73, then that will be bullish. The alternative could be we spend a day or two here, and then we take out the high, and then we go higher. So we take out this level here. So we get like a breakout out of this range. Same thing could potentially happen here with the German DAX, actually, to some extent. Gold prices, on the back of those news, gold prices were knocked down. Why? Because of vaccine. Why do you need gold for at that point? If things are going down, if things are improving. I personally think there's going to be a situation where you have, still because of all the stimulus, you're still going to have people buying gold because of that. So this is something interesting, and I will continue to be bullish. There's no reason to make any changes. We did go down to the buy spot, so again, no changes. Crude oil prices, so they actually was mistaken on the expiration of this contract. In fact, this contract expires today according to the news. This is the June contract in West Texas crude oil. We took out this high, which itself will be more bullish. However, we're dealing with a contract that's going to expire, and with many CFD brokers, you were closed out yesterday. So let's see what happens here. But the key point now with the contract that people will be trading is this one, which is the July contract. And here in the July contract, we're still below this high here from April 14th. And we had a significant rally, a nice cool 31%. From a slow, this market added 86%. So if you're looking at this, the most natural thing now would be a bit of a pullback. If we take fibs like that, maybe first fib, 50 fib, and then from here attack the upside. I still think we're dealing though with we can easily have go down, spend a few weeks here, and then we might be able to draw some sort of a trend line like that, and then we can maybe do something like this, and then we're dealing with potentially a massive inverse head and shoulders, but we haven't properly developed that low. And then here again, this wouldn't be totally crazy, guys. We were trading here in January in 58, and then just when the crisis struck, we went down a bit, down here. But this is when the price war and everything that kicked off. So it wouldn't be unrealistic that we're trading at 59, especially given how the economy is being supported. So let's take a look at this. But again, I think it might take a bit more time for this to go down. Let's take a look now at, we're going to take a look at the Euro USD. Euro USD is also higher. So a few days ago, I said if we take out these levels, we can probably go a bit upwards, and we're within that sideways pattern now. So what we have seen quite clearly is that in times of when people are not as stressed, not as worried, people are not buying dollars. And the reason why they buy dollars is mainly to hedge their positions in dollar loans in emerging markets. So you're seeing here that the euro is going up. Not only that, I forgot to mention this actually. So there has been German and France have agreed to create a 500 billion recovery fund in the EU, and they're going to issue its own maturity. So the idea to create Eurobonds is not being finally coming to fruit. It's not exactly maybe as everybody wanted, but the money is money, and the money is there. So what's going to happen is going to issue long-term bonds, and I don't know exactly all the details, but obviously there would be spread of the risks, and I think that's important here, because then you can take that instead of Italy going out and borrowing money at higher interest rates, for example, than Germany, which again is fair anyway because of the risks involved. Then what happens here is that they can all do this together, and this is like a recovery fund, right? So it's a limited project, and what happens here, they can raise that money, they can give that money to countries that need it, and then they don't have to borrow money on their own, and there's no worries about the situation with creditworthiness. So this is encouraging. Also, one of the reasons I guess why this is coming up higher. From trading perspective though, unless you bought at the lows here with stops below, it's a bit too late to do anything here. Again, if you're a scalper, then maybe you can scalp this at the upside, but I will be very careful. If you really have to put a position on here, a bit of a pullback, maybe to 108.50, and then attack the upside. But again, nothing I would trade. Here is the GBP versus the USD. Yesterday we said look, the book profits down here, at least 75% or so. I think if you did, you'll be very grateful because we're back up now here where we started. The original idea was to sell here, and now we said yesterday look to be bearish from 120.191. For now, I'll remain bearish. Of course, it's going to attack the upside a bit more. It sure looks like it, but as long as you're below 23.41, there's no reason to make any changes to the outlook. And here's the dollar versus the Japanese yen, where the market is pretty much trading sideways, and there's not a lot of activity. Okay, unfortunately it's 10 a.m. and I need to leave, but I'm gonna say good morning to you guys at least. We have Sarbiat, good morning. We have Marvin as well, good morning to you. True Invention, good morning to you. Liz as well, good morning. And Maurizio and Anjay. Okay guys, we're gonna be back tomorrow, same time, for the next market update on the markets. Let's see what happens. It's really encouraging what we're seeing in the markets. It's easy to be a bit cynical, and it's easy to say that we might not work out, and you know what, it might not work out. I think though that we will work out, and things will be okay, because the world is different now. We're all working towards the same, solving the same issue. A bit different when the Spanish flu, because that was during World War One, and in World War One was quite interesting actually. It's because people were at war, they did not want to be unpatriotic and spread things like, oh, we have a flu, and it's killing a lot of people. It's a very, very different situation now compared with back then. And it was just called the Spanish flu because the Spanish press was not being sort of censored, and that meant that they could actually be more open on what was happening. And even in the US and places like that, because everything was about the war effort, they disregarded closing down cities, quarantine. In places like I think San Francisco, that did really well the first time around. They took the issues more seriously. They quarantined and developed different sections of the city. The problem was the second time around when you had a second wave, because things started in the US, according to historians, it went to Europe, and then it came back. And when it came back as well, it was much more dangerous as far as I understand it. But now it's a totally different ballgame. Okay guys, have a great idea, and I'll see you guys tomorrow morning.